Welcome back everybody, and today's video we're going to look at the fundamentals of price action based trading. Now we all come into the market hoping that it's going to be as easy as ABC, but we quickly find out that that's not the case. Now through my experience and through what I have learned, I've found that price action based trading is the best way for me. It's the best way to be consistent, and I think it's a really good way to trade these markets. So in this video I'm going to show some of the price action based trading styles, and hope you guys can benefit and hope we can smash some entries like this one here. And with that being said, don't forget to like and subscribe to this video because it really does help out the channel and helps me push out content. But before we get started, I do have an announcement. I've decided to make a Telegram channel for free. It's in the description below. Every day I do give my chart markups of what I expect in London session, what do I expect in New York session. I do give my trade setups, my entries, and we just ask, share ideas, bounce off each other. You can ask me questions, speak to me more directly, because on YouTube, I post once a week. So in the Telegram you can chat to me wherever, and there's constant content coming through there. It'd be a pleasure for you guys to join because trading can get lonely. Link is in the description, so please take the chance to join, and we'll chat there. Take care guys, and let's get straight into this. So when it comes to the three things of price action, there are three very important steps that when all combined can ensure you trade the right way and get the perfect trades. And when you combine these things together, it enables you to trade price action based strategy in a price action based method. So the first thing you have to understand is structure. Then you understand your support and resistance levels, or your barriers. Once barriers are broken down, you can infiltrate, and those infiltrates is the moves that you're able to make the trades. And at the last thing, and one of the very most important things, is the actual candles itself, because candles, they tell you volume, they tell you direction, and they tell you what the market is doing. All of these things together, you can have the highest probability and statistic to put yourself in the best position to win. So with that being said, we're gonna first look at structure, and this is very important, and then we'll look at support and resistance and come back to candles. So let's get to structure. So when it comes to structure, you have to understand that we want to be trading with the trend. Why do we want to be trading with the trend? Well, if we don't trade with the trend, we're most likely not to catch the biggest moves. And you also want to understand in structure, where do you want to take these moves? So in a video I made perfect entry that talks a lot about the depth of trading and catching structural based trades. So basically when to enter in those trades. That video should be popping up, so check that out for when to get the perfect entries. But just a brief overview of why trade structure in terms of price action is because if we take here, for example, a simple uptrend, right? So we're going to draw an uptrend here, and an uptrend is of course higher highs and higher lows, right? So here's your higher high, and that's your higher low, and then another higher high. So in an uptrend like this, we can see that the impulses, which are the moves towards the upside, are normally bigger than the pullback. And we'll go to a chart and have a look at this, but I want to show you here where it's nice and simple, right? So you can see here that the move up here, for example, would be 27 pips compared to the move down, which is only 15 pips. So that means that we want to be trading with the trend and trading the structure towards the upside. But when to enter becomes the problem. We obviously don't want to enter all the way up here, because then we're going to be hitting drawdown. Even though we could keep our stop loss technically here, we don't want to be in a position where we're entering drawdown. So what we want to be doing is either finding an entry here or as structure breaks. But as you guys know, if market simply just did this all the time and then break down and go the opposite way, it would be very, very easy to trade. So we have to look at the best opportunities and use the time frames for us to be able to use structure and get the best possible entries and trade the price action. So we're going to look at a few examples here to make this nice and clear. So let's get to that. So here's a quick structural based on the charts here. So we can see that obviously we're in a downtrend here, right? But what do you notice? You notice that the downside moves are much bigger than the retraces. Look, retrace downside. Look at this downside move here. And that is why we want to be trading with the trend. Now, I'm going to skip through the concepts quite quickly so that we can get onto the examples, so you could see how to use all of these factors together, because that's how you're going to enter the trade. You can't enter the trade just based on one factor. So that brings me to our next topic, which is going to be support and resistance. Now support and resistance is very important because these are your barriers in a chart. When you have a level that's holding a big level of support or resistance, you know that if that level was to be broken by a closure outside or outside of that range, essentially, you know that price should continue down if on the left hand side there is that range for price to continue down. So knowing these levels is a part of price action, and knowing when these levels break can entitle you to put you into a position to take a trade and potentially win. So let's go have a look at an example of when that happens and how to apply. So when it comes to structure, when it comes to finding key support and resistance levels, you should always start from the higher time frames, because the higher time frames will always tell you the general direction of where the market wants to go. And when levels break on higher time frames, it generally lets you know where the direction will go on the smaller time frames, and all you wait for is price action to develop its structure and take the trade here. Here on, for example, pound yen, we can see that the daily closed below this level here, and this is a break of structure. Closing a break of structure should imply that, looking here, we have this candle here, and we should come down to fill this bottom level coming into next week. Why is that? Well, it's because structure is broken. We are on a downtrend. Here's your high, here's your low, here's your higher low, and here's possibly the break of structure, right? That's where you got your structural break with a candle that we'll get into very soon, with a strong candle implementing that price does want to continue down on the lower time frames. Yeah, we are getting a wick, and this is where you have to understand how on higher time frames this is going to be a wick for price to maybe retest this area to continue down later on. But on the lower time frames, what it actually turns out being is structure towards the upside. So with that being said, you go down the time frames, you check the 4 hour, and you look for possible support and resistance areas. So if we were to take an example like this, when pound yen was at this area here, all right, this was a very strong support level for price, because you can see on lower time frames these were all rejected. It was rejected properly with a higher time frame, and then it was rejected one more time, and price at that time failed to close below this area, therefore could not fill this range it had here. But once price decided to break this 4 hour support area, create its top wick, right, which is your, so this is your confirmation. And while this top wick, so let me remove some of these drawings. So while this top wick was being created here, as you can see, this top wick, this is your chance. Once you have the confirmation that the 4 hour structure, the support is broken, this is your chance to be getting into trades, is when that top wick is being created. Why? Because the higher time frames are telling you that structure is broken, and that key support level here, that key barrier is broken, and price should continue down towards the downside to fill minimum this range down here, which we can see happened. Now this is where you have to jump onto the lower time frames to find your optimal entries, which I do cover in the video that I mentioned in the beginning of this video. So let's see how a key support level would work on a lower time frame. So now we jump down to the 15-minute. We can see that we've had this key support level here bounce off many times. Price is not going to drive down unless it wants to close. Daily was bearish. We had the 4 hour closing below the range. Here's your pullback. Now we want to look for price. We could have taken a trade here, but we did not have a very strong close below the range. Ideally, we do want to take a trade around here, and this would have been a perfectly valid trade. But what we have to worry about is the range we had to go down here was only 7 pip range, not worth to take a trade. But if we know that 4 hour is bearish, this was its pullback to create the top wick, and now we're closing below the range here with a clean range here to fill, high chance price should come down to fill. So we can see that we did get a nice move after the closure of 11 pips, which would have been enough for you to secure enough profits. Now you would keep the stop loss here, and this is where you have to understand structure, and this is where structure comes back, is that price will just not collapse. It has to make higher highs and higher lows, and that's your pullback, pulling back to this area, at the same time filling the range it had to fill. So then you get another opportunity when price closes below this area here again, then you get the retest, price breaks below, you get the downside movement. Now you're starting to see how price action comes together. So we're going to look at candles and wrap this whole video up with how to execute on an actual trade based on all of these factors. So let's get straight to that. So candles are very important because they tell you what the buyers and sellers are doing in the market. They tell you the momentum and volume in the market, because you want to be trading in high volume times, because the volume is what's going to give you the quickest moves and the quickest trades and the trades that are going to be most profitable. And they also tell you where the momentum of the market and the potential direction is going based on candle closures and candle formations. So not candle formations in terms of doji candle, all of this stuff I don't really believe in. What I do believe in is that if we see candles, for example, on the daily forming like this, we know that there's equal buying and selling pressure. All right, and we know that most likely price is going to either range before it breaks out of this range. So we can see what happened. Price range, there was no volume in these candles. They were very small candles as soon as we broke above the range here. So now what you notice coming to this green bullish candle here, as soon as price closed above this range here, okay, you can see that the price was bullish. It had momentum in it. Why? Because it was a big bullish candle, which means it had volume. The next day, looking here, you have range to fill. You could expect a candle to be volatile and have momentum towards the upside. But what you have to keep in mind is we were looking bearish on the daily. So that's why it came up and then made a bearish candle here and continued to the downside. But what does this bearish candle tell us? Well, we can see in that day, price tried to go towards the upside with a wick rejection around this area here on a lower time frame. That's a resistance. So we can see that we had a wick rejection telling us that the buyers were not strong enough, right? That the buyers were not strong enough, the bulls were not strong enough to continue the price towards the upside, and we had more selling pressure. On top of having more selling pressure, the downside momentum was very strong by the price, because what you have to look at is the price from this point down to here got pushed down. That's how much the sellers were able to push down the price. So now we know there's bearish momentum. So high chance once this wick gets broken and makes a lower low, we should see some strong downside movements, which we can see we got here with this wick, even having with this candle here having such a strong bearish momentum, closing without a bottom wick, which is telling us it didn't even give a chance for buyers to buy up the price once reaching to this lower level, which is probably a reason why we're seeing this daily candle here have a bit of selling pressure and then getting bought up, allowing the buyers a chance. So this is where candles come into big consideration. They tell you volume, they confirm structure broken, because when a candle closes, it confirms that that level of support is now no longer valid. It's broken and price should continue down to its next support. So with all of that being said, we put all of this together, and this is how we trade price action. So this is how to execute on a price action based trade. Higher time frame structure is bearish. We're looking for sells today. Don't change your bias. I will personally be looking for sells. What do we end up having? And this is the reason why you have to understand higher time frame structure. Is what we have here is we have a resistance formed. We have a range to fill here. Price closed above the range but never managed to fill it. Why? Because we had a bearish structure. This resulted in a fake out. So there's an 85% chance price should come and fill this complete range. So with that bias in our head, right, and us knowing that, all right, we have an 85% chance of price driving down here, now we need to start looking for our entry for price to continue towards the downside. But the thing is, we have to look for a good time to trade where there's volume in the markets, there's volume in the candles to suggest to us that we can push through some of this messy price action and fill the bottom of the range. So knowing here we had a fake out, all right, we can come now to the lower time frame. So now we're going back and we see, all right, this is fair enough here. We do have a nice level of support here. So we can mark that level of support out, and we can see that we need this support level to break. And we have essentially a range down to this point here. It's a bit messy here, but after that it becomes very clean to the downside. But if you see volume in the market, high chance you could find an entry with the right entry requirements. Now I do have a full video on entry requirements, so make sure to watch that. So when you come to entering this, you need first the structural break. So we can see our support level was broken here with this 15-minute bearish candle. So this is implying to me that price does want to come down and fill this range, but we have a lot of messy area here. So we don't want to take a trade on this 15-minute candle, because what could happen is price could just whip up and just continue in this range. But we have a strong 15-minute candle closure. We had a fake out, so 85% chance, and we're trading during a time of volume. So now it comes down to finding the entry, and we want our entry to ensure us that we don't experience drawdown and give us a confirmation that price does want to continue down. So we jump down to the 5-minute and have a look at structure at the 5-minute. So in the 5-minute, we can see that we had this very strong bearish candle here, and after a strong move like this, you can expect a pullback. We can see that price pulled back to this area, not closing back within the area. You can say it's a retest, you can call it what you want, but you see the wick rejection, and this is where coming to no candles is useful, because now we can see that the price was being rejected at this area. So now we know if you imagine this is now basically a mini higher low, right? So this is the impulse, this is the pullback, and you know, if price were to break this bottom side here, high chance it should continue down. So that's where our possible entry could be, to take price down towards the downside. So if we now go and put, you know, our short position as we break the wick, because as we break the wick, that will be a structural break. Remember, short-term time frames, we now can keep our stop loss above this high here. And what do we target? So now we jump back to like the hour time frame here. We can even jump back to the hour time frame. Why is it? It's made me lost in the charts. There we are. So we can jump back down to the hour time frame, and we can see, yes, we do have a clear support level here, which is why we needed the confirmations on the lower time frame. But here is where I would place my take profit, on a strong support level here that has been tested multiple times. With volume, we should push through it, and you can see what happened is that, yeah, we did push through it. So what you could have done to be risky on this trade is, once it broke that wick, you can see here, once that wick was broken, right, and we came to the downside on our entry, we were already in about, you know, 5 pips in profit. What you could have done is move stops to break even if you were scared about this resistance here. But with all of the confirmations, we did have a high probability of price continuing down to our take profit, and that's how you trade price action. So it's very important. You need to make sure that you do have a clean range to fill, you do understand structure, you do understand candles, and on top of that, you do know where your support and resistance levels are. With that being said, take care, trade sharp, and until next time.